I've got money stacks bigger than you, rallying off a weak CPI number. You perma bulls are a joke, but watch me turn the tables and leave your ass broke. Weak ass bears getting slaughtered, turn them bullish in fright. You thought you had a chance. Not tonight. Bulls think they're safe, but I'm here to shake things up and leave you in a daze. JPM collar gets popped. Jamie Dimon's in a bind. He's settling Epstein's case out of court. And history won't be kind. Jay Powell in the house, dropping lie bombs every day, disrupting the markets, making the weaklings sway, guiding the Fed with my acerbic might. Watch me tear you retards apart day and night.
All right, guys, so there you have it. That was Jerome Powell's FOMC speech. Definitely one for the ages. And then here's what else he had to say.
Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures.
So the Federal Reserve has once again decided not to raise or cut interest rates. The Fed will keep interest rates at the current level for now. And in this video, we have a lot to discuss about what the Federal Reserve has done to absolutely wreck everyone and how this is going to affect the crypto market moving forward over the next 1, 2, 3, 4, 5 years. So we got a lot to unpackage with you guys. We have to talk about what's happening for the altcoin market. We have to talk about what's taking place for XRP, some big news that just dropped for Ripple as a company, and what you can do to make the most amount of money possible. So if you're feeling bullish, comment 777. If you're feeling blessed, comment 777. And as always, if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it.
It's all a scam. This is all a scam. I mean, we got people that's getting ready to retire that's going to try to live off $2,000 to $3,000. Impossible. It's impossible. Because what happens, it comes up here, we spend it. We're $35 trillion in debt. We don't have any money. We're dead broke. And then taxpayers have $2 trillion in credit card debt. We are in huge trouble. In this body, we had better start figuring that out, because we're going to have a run on this city here soon, and there's going to be about 150 million people coming up here saying, where's our damn money that we paid in? I could have put my Social Security money 40 years in tax in the market and probably be worth 8 to 10 million today. But the federal government wasted it. So I'll get off my horse there. But it's good that we have this, because we got, I get a little pension check from education. I was part of a union. It's not going to help people. People are going to have to work, continue to work longer and longer. Am I right? Can you say something about Social Security and it being taxed for some reason? We're taxing people for the second time on the Social Security that they put into an account.
And when we look at the U.S. federal tax revenue right here at $4.8 trillion, how are they going to pay off all the U.S. national debt of nearly $35 trillion if all the tax revenue is going over to Ukraine and other countries? So it's all a scam, guys. And when you look at the whole entire system and you understand that pensions are being looted, 401ks are a joke, and that guy saying himself he could have invested in the markets and had, $8-10 million, it's no wonder why, people... The American dream is to invest in other countries and basically get out of the United States and get out of the US dollar. And when they start paying attention to the news and what's happening on this channel and subscribing to this video, they see some of the craziest information that blows their mind, because it's all fact-based, and I form my opinions off facts, as do you. And when we look at the facts of the inflation rate, it gone down in May a little bit, 3.3%, but it's still going to be above the Fed's target of 2%. So they're going to keep rates steady for a period of time until Jerome Powell thinks that inflation's under control. But inflation's never going to be under control, because if their goal is a perma inflation of 2%, they're most likely not going to hit it. And then they would have to accept defeat, knowing that inflation is not going to go back down to 2%. And let's say that it does, well, you're still losing money on your dollar, and they can promise you that. And so the FOMC meetings that take place, happening, today at the time we're recording this video. The next one, July 30th through the 31st. If we open up the CME Fed Watch tool, it now has the next meeting popping up in 48 days, and 99% of people, expected them to pause rates, and sure enough, they did for this meeting in July. 91 are expecting them to keep rates paused again until this number right here in inflation dips down to 2%. We won't see, in my opinion, I could be completely wrong, and quick disclaimer, I have no idea what I'm talking about at all because I'm not a financial advisor, and my lawyers tell me that, I have to say that I'm an absolute idiot and you should not listen to me whatsoever, because you could lose all of your money in these markets, and these videos are purely for educational, informational purposes only. So go listen to a financial advisor on what to do with your money, because I have no clue, and I don't know anything. So here's what we're going to look at here. Okay, the CME group with 91% expecting a rate pause by September. Well, it's 58% are expecting a rate cut. And so Jerome Powell goes on a data basis. So what he said 6 months ago is not really relevant today. So, what he's saying today will be relevant moving forward, but he can change his stance at any moment. And how this will affect the crypto market, well, one thing that we need to look at is the effective federal funds rate, and then compare that to the 10-year to 2-year inverted yield curve right here, and see we're inverted at negative 0.42. The last time that we were inverted all the way back in 2006 was during that crash of the subprime mortgage crash. The time before then was 2000 to 2003 crash. And so the real question is not if the markets are going to crash when the Fed starts, cutting rates, but when will they start cutting rates rapidly, and how quick and how big will the crash be for the stock market, and how will that affect the crypto market? Because when we go back to the last crash, 2006, 2008, crypto wasn't large enough. So virtually nobody knows, guys, because this is the first time that this has really ever been this big of an inverted yield curve inversion coming out of here, that crypto has blown up to the point where it is today. And so we can then compare, which I'll do in a little bit, the crypto market to the stock market to see how correlated they are together. So this is going to be a jam-packed video of value for you guys. Now let's look at the Fed funds rate, and let's look at the last few times that they cut rates and when they paused them. So right here from like August of 2006 until they started cutting them in July of 2007, it was roughly about 334 days. And so when we look at how far we are into this rate pausing period, we can see right here, August of 2023 to where we are today, it's been about 305 days. And then back in July of 2000 until, roughly November of 2000, it was 123 days before they started cutting. And then it took them about 972 days before the rates bottomed out and then started going back up again. And that was during the 2000 to 2003 crash. So the dot-com bubble boom took about 3 years to find a bottom. When the Fed started cutting rates after November 1st of 2000, if we go to the Dow Jones Industrial Average, we can see that the market was already in a downtrend. And from November of 2000 to the bottom, it took about another 713 days. And then 2003, March of 2023 is when we made a higher low, so about 861 days after that period. So when the crash takes place, it doesn't just happen overnight. You guys can see these periods where we see a sell-off, recovery, sell-off, recovery, sell-off, recovery, sell-off, recovery, sell-off. So what we're making is a series of lower highs and ultimately lower lows during the downtrend. And so a vast majority of people think that rate cuts are good for the stock market and the economy. Well, not necessarily, because it's proven that when they're cutting rates, the stock market during the 2000 to 2003 crash was in a downtrend. And as you can see right here, the rates were about at 1% in July 1st of 2004. And then by August of 2006, just 2 years later, they were up by 5%. What happened in the stock market during that period? Well, the Dow Jones was roughly around 10,200. It had recovered out of the bear market bottom because rates were all the way down at about 1%, and they held them steady for a period of time until July of 2004. So while they were dropping rates, the Dow Jones Industrial Average was crashing. And then once they paused rates at a low level of 1%, that's when the recovery took place. Then by like August of 2004 until August of 2006, for 2 years, they were raising rates rapidly. And the market was still in an uptrend. We saw a series of higher lows and a series of higher highs, but it wasn't really making that much in gains. Like if you bought in right here in August of 2004, well, by August of 2006, you're up 16% on your income. So it was still a recovery nonetheless. So raising the rates wasn't negative for the markets. It was during this period right here, after they went from pausing rates to rapidly dropping rates, that the markets crashed. That was the most important thing to know. Now, roughly around the 1st of July of 2006 until like the 1st of July 2007, about a year later, they paused rates. Well, what happened during that that period of that year when they paused. Well, the markets went from about 10,600 on the Dow in July of 2006 all the way up here to about 14,000. So we saw a rally for the Dow of about 30%, ultimately forming a high by October of 2007 for a blow off top of 32%. And then from July of 2007, the Fed dropped rates from about 5.3% all the way down to like 0.03% by December of 2008. So you can see during that period is when the market crashed like 40% and then ultimately formed a deep bottom in March of 2009 when the rates had bottomed out all the way down here. And so again, when the Fed was dropping rates, we saw a series of lower highs followed by lower lows and ultimately just a fall off a shelf and absolute collapse down to the bottom. So the people that were buying in the stock market when the Fed had made their final rate pause before cutting were buying all the way up here. They saw a drop of over 50% of their net worth over the course of 2 years, less than 2 years. Now for about 2,892 days, what happened from 2008 until 2016 is they just started pumping liquidity. This is where the Fed absolutely wrecked everyone. And it was most likely because of what George Bush did in 2008 to save the economy. They just turned on the money printer, and that's what caused the debt of the United States to just skyrocket. When I was in high school, guys, which wasn't that long ago, so we were at $7 trillion in debt. Now we're at $34 trillion. It was because of what happened during this period right here. There was no reason to keep the effective federal funds rate this low for that long. It was like at 0.15% for 2,000 plus days. And then as you can see right here, from November of 2016 till January 2019, they started raising rates again. And that whole entire time from 2009, we were just in a massive macro bull run, the biggest bull run for the stock market. And then look at this, we started going all the way up here, this little micro crash in the market right here when they decided to pause rates, which was virtually nothing compared to COVID, because from December of 2018 until February of 2020, the markets recovered. But look what happened right here from February of 2020 until March. They dropped rates from 1.6% all the way down to 0.07%, cutting rates very, very quickly. At the same time, we saw the markets absolutely tank, and that's when the crypto market was affected as well too, because of COVID, the pandemic, closures. Everyone was freaking out. They didn't know how it was going to affect the economy, obviously. And then what happened from that point on? Well, March of 2020, the CARES Act was signed into law, and that was a recovery act, basically printing stimulus, giving checks to everyone, keeping everyone locked inside their home. And then from May of 2020 until March of 2022, rates were down here. They finally found a low, and then the money, was going into the markets again, and then we saw the markets drastically recover from here. So one thing that's very interesting to look at now is from March of 2022 until August of 2023, the Fed has been raising rates. During this entire time period, the market's been pretty volatile, but ultimately we've seen a series of higher lows and a series of higher highs. So we're in an uptrend right now. And so the real question is, how much longer will this uptrend continue for? And not if the crash will happen, but when it'll happen, and how deep will the next crash be when the Fed decides to start cutting interest rates again to the downside, and how rapidly will they cut in response to what takes place in the economy. So because I have no idea, I use certain indicators and I look for confluence that I'm going to explain a little bit. And also what we look at is like the CME group. We look at what the predictions are in terms of September. 58% are expecting that. So depending on the July meeting, right? July, 91% are expecting them to keep rates paused again. What Jerome Powell says July is going to be the most important meeting to watch, because the meeting just after that, they're expected to start lowering rates 61% now. This just actually changed when I refreshed the page. So now more people are expecting them to see the first rate cut before the end of the year. And as you can tell, the past few times when the Fed starts cutting rates, it takes less than 2 years for them to get down to what they've gotten down to before. And during those 2-year periods, we see the stock market make a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, ultimately find a bottom, and then recover on out of here. And so if you're patient enough and you pay close attention to what I'm about to share with you in this video, this can be an amazing opportunity for you to be able to make as much money as possible on the way down, as we make a lower low, lower high, lower low, lower high, lower low, lower high, and ultimately find the bottom and then start recovering out of here. So that way you're not stuck buying the top, and you can get out of the stock market and ultimately be patient enough to time and buy the bottom based on key indicators. Now, one of those key indicators is the relative strength index compared to the past. We are at 95 on the RSI on the monthly for the federal funds rate. So we're in the most that it could possibly be right now, and the Fed is not going to raise rates. That's for sure. They're going to be cutting here soon. And so if we look at the past at what happened when we were upwards at these levels, well, the Fed, started raising rates back in December of 2015. During this period, the RSI stayed above 90 for an extended period of time. When they started cutting rates, you see the RSI just plummet and go all the way down to 13. And so that's most likely going to be happening at some point. Now, that this year, early next year, and then over the course of 2 years, I'll give you my prediction a little bit on how I think that's going to affect crypto. And so I find this stuff very interesting because going back to 2006 to 2007, look at where the RSI was at. It was at 95 and drastically overvalued Fed funds conditions. And then it started to drop, went all the way back down to 6. Then the rate stayed bottomed out for a period of time. Look at the time before then. We were upwards of 74. Each time that the Fed had the rates at a level that were high and then they lowered them, the RSI was above 70 and even above 80 and even above 90 multiple times. And so you can line these periods up, April of 1889. You can look right here in May of 1995. You can look right here almost every single time. I can't see a single time where the RSI hasn't been up there. Now, another thing to note is the MACD. Very similar to crypto, what we look for to see reversals, whether it's a bullish reversal to the upside or a bearish reversal in terms of price action, we want to look for the similar confluence on the Fed funds rate. So what do we look for is a bearish cross to signal that the momentum has shifted from hawkish to dovish or from bullish to bearish. And so hawkish means that they're raising rates up, they're aggressive, they're increasing the Fed funds rate, loans become more expensive for overnight loans for banks, and just like real estate loans go up, car loans go up, it just gets harder to spend money. And then inflation is, eating away at your savings account as they're raising rates. But then that's where it's good money in the crypto market. And then crypto goes up. We've seen Bitcoin go up and we've seen the stock market go up. And so while they've been hawkish, look at the MACD. We can see a shift right here, right? We saw a bearish cross where the MACD line in blue crossed below the signal line on the monthly, well above the zero line at levels we haven't been since 1980s, guys, since the 1980s. And you saw what happened to the funds rate after that. But let's look at the last times that the Fed dropped the effective federal funds rate. In February of 2020, we saw a bearish cross happen while the rates were paused. The time before then, we saw a bearish cross happen while the rates were paused. The time before then, we saw a bearish cross happen right when they started cutting rates. The time before then, we saw a bearish cross happen when they started cutting a little bit. The time before then, we saw a bearish cross happen. So the past 1, 2, 3, 4, 5 out of 5 times. And so that's confluence, right? That's what we look for. And also on the RSI, we saw the RSI upwards of, the past 1, 2 times, it was upwards of 95. Then if we go 3 times, it was upwards of 80. The 4th time was upwards of 80 as well too. And then we were at like 78 on the 5th time. So anything above 70, overbought or overvalued Fed funds conditions. And so what this is telling me is that with this bearish cross, we're going to see the MACD line start to come down. We're going to see the signal line start to come down, but stay above the MACD line. And eventually we're going to see the Fed pivot on interest rates. They're going to start lowering rates depending on how rapidly they lower them. They've just proven that they make the same mistakes time and time again. And so at the speed at which they drop the rates will determine the speed at which the stock market drops. But I think it'll take like a couple years to get to the bottom. And we're going to see, some more price action to the upside. So let me just clear these 44 drawings right here, because during periods where they raise the effective federal funds rate, the markets have proven to go up. When they pause rates, the markets have either stay volatile or they go up. And then when they cut rates, that's when we start to see, things start to unfold and take place. So I think there's still further to the upside for the rest of this bull run for the stock market. And I still think we have yet to see the real true, euphoria blow off top peak like this. And then I think we're going into some 1929 style crash. This is what I think it's going to more so look like, where a lot of people are going to be buying in over the next 1 to 2 years. And then I feel the markets are most likely going to be topping out, in 2025 at the end, when they start cutting rates, and then we'll start making lower highs and lower lows. And same thing for crypto. I think crypto is going to top out relative to the stock market, because if we look at the crypto total market cap paired next to the Dow Jones Industrial Average, back in November of 2021, when we topped out for the whole entire market, we were topping out close to the same amount of time. I mean, we topped out in January 2022, so a little bit after for the stock market. So what's a couple months in the macro of the weekly or the monthly chart. And so we went into a bear market. We bottomed out right here back in like October, it looks like, for the Dow, October 10th. And then we started a recovery right here. When did we bottom out for the crypto market? We bottomed out in November, so just a month later. So these are within like a month or two of each other. If you look at my crosshairs right here, and then we started to recover out, the Dow's recovery was a lot more aggressive to the upside, whereas crypto just consolidated sideways and struggled to break $1.2 trillion. Then ultimately, look what happened right here, guys. In October of 2023, the crypto market just bounced rapidly to the upside. BlackRock, institutions started diving in. Look at what happened to the Dow in October, the exact same month. The Dow went from 32,000 and it just rapidly went to the upside. Now, the crypto market is struggling past the all-time high, whereas the Dow is currently past the all-time high. And look at what happened on the 11th of March. You know, the Dow has just been consolidating sideways. Look at what happened on the 11th of March. We saw this sell-off in this consolidation period sideways right now for the crypto market. So if I'm correct here, over the next year, then what we're going to see happen here, and I could be completely wrong because I'm not a financial advisor, but we're going to see the crypto market absolutely melt faces past the all-time high and ultimately form some type of blow off top, you know, somewhere in 2025. Maybe it happens earlier. Maybe it happens around election time and we see, you know, the top form, you know, November, December, and then we start the crash from here. Ultimately, I think it's going to happen in 2025, and then we'll start working our way down in like 2026. I think the stock market's going to do something similar. We're going to form a blow off top, and then we're going to start working our way down at the same time. That's going to be when the Fed is rapidly cutting rates because the indicators are all showing confluence with the bearish cross on the MACD, the RSI upwards of 90. It's even at 95 right now, so that's as close to as 100 as it could possibly be. I think it's going to be very, very nasty for the people that are waiting to get in the market. So this is the last chance. This year, guys, is the last chance before the biggest crash in history. Now, I hope I'm wrong. I hope we don't see something like this happen for the stock market. I hope crypto goes up forever, but if you've been a student of history, crypto doesn't go up forever. It moves in 4 years, and the fourth year for this market cycle is coming up in 2025. And so we're still below the all-time highs for the crypto market. And an interesting view of Bitcoin going into the FOMC and CPI data today. The last two FOMC meetings marked local bottoms on that day. Two of the last three CPI reveals were near local tops. The other CPI was in the middle of the trend. So today, very, very interesting of what just happened. Where Bitcoin bounced from 66,000 and we're currently sitting at $68,000 right now. And so unless we break out and we break, you know, $72,000 and start trending upwards, we could be in for a much longer consolidation this year. And then getting close towards the end of the summer, we break the high. So if we see a sell-off to the downside, this is what I would be looking for. Now, obviously, it's exciting to talk about the bullish case scenario, but we are in this macro ascending triangle for Bitcoin where we can see this ascending support. The resistance is almost flat, not really, because we're making lower highs, but it's not that big of a difference. So some people could call this just a macro symmetrical triangle if they want, but it looks more like an ascending triangle to me. So if we were to see a sell-off to the downside, the zone of resistance that we want to look for is where the horizontal resistance right here between like $59,000 to like $62,000 merges with this ascending support. So if we draw from February of 2024 to the low of May of 2024, it brings us roughly around $61,000. So if we see, you know, Bitcoin do something like this where it gets rejected from this resistance, trades down because we did break below this ascending support that you can see right here where I'm moving around this yellow line right here. So we're coming back up to back test it as resistance. And if we get rejected from this and we trade to the downside, we see Bitcoin go closer to 65K. It might take a little bit longer this summer for Bitcoin to do something like this, and then we spring on out of here, and then we decide to break the all-time high. Because the reason why I think we're going to be breaking the all-time high and going into price discovery for Bitcoin for the rest of the markets, yes, I'm going to get into XRP in a little bit, is because this is the year where money supply and global liquidity is now positive. And as you can see during the bear market, they were decreasing money supply in it, and it was down in the red territory right here. So this first little green bar that you can see right here, they're about to start cranking on the money printer. And, you know, before they start cutting rates, you know, that's going to lead to a massive blow off top in the market. And so with institutions, they understand this. Why do you guys think BlackRock, out of all the industries they could have dove it into, why didn't they just do something with real estate? Why did they do something with crypto? Let me ask you that. Why did they go and get a spot Bitcoin ETF approved? Why did all these companies compete for that? Why do you see all this bullish news happening every single day on the channel? Go back and watch my last 10 videos and you'll see the news on what's taking place. It's because they understand global liquidity and what's about to take place. Why do you think Donald Trump is campaigning with Bitcoin as his main tagline, saying vote for Trump, Bitcoin mining may be our last line of defense against the CBDC. Biden's hatred of Bitcoin only helps China, Russia, and the radical communist left. We want all the remaining Bitcoin to be made in the USA. It will help us be energy dominant. Why is he claiming to be the crypto president? He understands something. To be a billionaire, you got to understand some stuff. Love him or hate him, I don't care. It doesn't matter. Nobody cares who you support, whether it's Trump or Donald Trump. What we do care about is how can you be financially free and benefit from what's about to happen so you can create generational wealth, so you can have as much money as possible. So when we look at Bitcoin compared to the crypto total market cap, excluding Bitcoin and Ethereum, total 3, we can drag up Bitcoin's chart and we can see some similarities here next to total 3. Whereas Bitcoin, when it was in this range where total 3 is now, this was between November and February. We were in between this dead cat bounce stage where we saw this ABC corrective wave that I talked about yesterday with you guys during the bear market. We see the high right here, A wave, B wave, C wave. And if you want to be even more technical, the true high was like April 2021. So technical A wave, B wave, and C wave down here. And so we're between the A and the B wave from this dead cat bounce right here when Bitcoin was November to February before it broke out to retest the all-time high. And so when you look on the left-hand side of the screen, you can see, A wave, B wave, C wave down here. So because we are between the A wave right here and the B wave, and then you look right here on where we are in this consolidation period right here, arguably, and like I say, I could be wrong, but the next move to the upside is going to be this rapid move really, really quick to the all-time high, just like what happened for Bitcoin right here to right here, and then the next consolidation. And when that takes place, what's going to happen with Bitcoin? Well, because Bitcoin leads the market, Bitcoin will move first. And then when Bitcoin decides to, cool off and do a consolidation around $100,000, whether it makes to 90 or 120 or 100, we don't know. But one thing we can know is how that will affect the altcoin market. When Bitcoin does that and it starts to move, altcoins will start to move. When Bitcoin cools off, altcoins will finish their move and then they'll consolidate. Now, whether the altcoin market consolidates at the all-time high or past the all-time high, it's very clear that we're going back to $1 trillion. We're going back to $1 trillion, and we're at 650 billion right now. So that's hundreds, guys. Hundreds of billions of dollars that are going to be flowing into the altcoin market. Now, what projects are those going to go into? Large caps, and then a lot of mid caps, and then the micro caps is where you'll make the most gain. So pay attention to the end of this video. I'll share how you can benefit from that. But Standard Custody just announced that they have entered an agreement to be acquired by Ripple. They're looking forward to the next chapter, focusing on what they do best, building enterprise-grade solutions for their customers. So Ripple's target market is not you, a retail investor. Their target market is the big dogs, the big fish, the big whales, the big clients, the big banks, the central banks. And so they could care less what retail thinks, in terms of price action of XRP, because all their heads are on these partnerships. And what they're doing right now is they're getting ready to replace Tether, USDT, over in the European Union, because Europe is, in the next month, is basically going to be banning Tether on these exchanges. And USDT is the largest stablecoin that is paired to Bitcoin, to XRP, to Ethereum, to all these currencies on these exchanges. And so introducing Ripple's USD, RLUSD, a 1-to-1 US dollar backed stablecoin offering transparency and stability on the XRP ledger and Ethereum, coming later this year. So coincidentally enough, they're dropping a stablecoin. They're going to get clarity on this lawsuit this summer before the end of this year, guys. And so when that happens and they drop their stablecoin, where do you think look at this. When we go to coinmarketcap.com and we look at Tether, where do you think $112 billion is going to flow to when Tether gets banned? Because Tether's a ticking time bomb. I've been saying this for years. And now you're starting to see it happen and unfold in real time.
The name of the Ripple stablecoin, the RLUSD, I like to call it Real USD, Ripple USD. We're very excited about this. I also will emphasize, as I've emphasized many times, we think this is very much complementary, additive to what the overall XRP ecosystem is doing. Anything we do in mind of how do we make sure XRP is as successful as possible for everyone here. having, as David talked about stablecoins this morning, having liquidity on chain, having the bridging, and frankly, better on ramps and off ramps, that's good for everybody. In no way does that take away from our commitment to.
There have been a lot of just macro and general crypto problems that have trickled down to XRPL and the firm Ripple as well. But those seem to be improving, Brett. Is that a fair take? I mean, at least from a regulatory perspective, XRP is now backlisted on Coinbase and trading. That's good news. But it's not 100% maybe where the industry would need it or want it to be.
Yeah. I mean, look, I think as you reflect on the last handful of years, we'll call it 4 or 5 years, there are things that are super frustrating. Why did the SEC go after XRP kind of first, if you will? In some ways, you look at that now and you say, we're almost at the very, very end of that journey. I think that, hopefully we have resolution. We can't control that now. The judge, will make the decision when she makes the decision. My estimation is sometime before the end of the summer. Somebody asked me, is that the end of August? I pointed out that September 21st is the end of summer. So I don't know, sometime there.
I think my birthday, August 28th, that's the end of summer.
You know what? I'll ask her if we could celebrate your birthday with that. That would be,
yeah.
We'll all celebrate with you.
We'll call the judge.
But look, it has been frustrating. What has been exciting is the momentum that has been building. I mean, look, there are 3 times as many people here as the last Apex. This community is more active, more vibrant, more entrepreneurial. I mean, it's just awesome. Like I see the momentum and the excitement here, and it's just very palpable. The U.S. market remains, frankly, a laggard. The U.S. regulatory environment, even though Ripple is at the tail end of that, and I think it's strange to me that XRP is in such a unique position and that the market hasn't kind of rewarded that. XRP in the US is one of the few things we can say definitively is not a security. With ETH, I don't know how this is going to play out, right? Apparently Wells notices, which is the SEC kind of pre-warning that we're going to file a lawsuit, have been gone out to consensus, purportedly, as I've read, maybe on your side as well, to consensus. We know the Ethereum Foundation has received various inquiries. So look, it's super frustrating. And even it's not just the SEC. The United States kind of current administration with Gary Gensler as the head of the SEC has been pretty hostile towards crypto. But look, you asked the macro question. That has been frustrating. I think we're largely on the other side of that. And it's the reason why I'm so excited. And hearing David talk about what's going on in the XRP ledger, I look at the next 5 years and what this community may look like 5 years from now, and I get very excited about it.
People are going to have different use cases and different demands and needs. And the XRP has a privileged place on the XRP ledger. Through pathfinding, always looks for XRP liquidity first. The auto bridging causes trades to automatically look at XRP liquidity where they don't automatically look at any other liquidity. So XRP is always going to have a privileged place as a bridge asset on the XRP ledger, and stablecoin ecosystem is not going to change that. It's just going to enable more use cases.
So for the people that are concerned that their stablecoin is going to replace XRP, no, it serves a different market and it just adds more liquidity to XRP and to Ripple as a company. And when we look at this interesting, unique situation that it's in, it's no different than what happened back from December of 2013 until March of 2017. It's just an extended symmetrical triangle right here. So as you guys can see, XRP's price, stayed low for a relative long period of time right here. You can see from October of 2015, even going to May of 2015 until the breakout, 679 days right here. So if we were to measure from May or June of 2022, we're at 721 days. So sure, it is a little bit longer, but as you know, the more that the price coils up on a chart, when it does break out, that generally means there's no guarantees, but that means the breakout's much larger. And so when we look at where XRP could go in the short term, if there is a shakeout for Bitcoin, and let's say they want to liquidate the long traders first before they pump the market, similar to what happened right here when XRP dropped from 0.006 down to 0.002 or 0.003. It lost 50% really quick on this wick and then worked its way on out of here off of this ascending support. Let's say they do that to XRP and it breaks this macro ascending support right here. Well, the next level to the downside would be where Ripple or XRP, because Ripple isn't XRP, obviously. People confuse the two. Ripple is the company, XRP is the currency. But right here, we look at the resistance of where it struggled to break out February, July, and then it did break out and then got rejected after the lawsuit was filed. And so this would act as the next support. It also was where XRP's price bobbled around. So this was like 34.35 cents. So if there is a shakeout, the last chance and the last opportunity would be around like the middle 35-cent mark. And then, well, Bitcoin would be getting wrecked either way too. So in my opinion, risk to reward ratio for this project, absolutely incredible. In terms of the macro, on the past, if we drag from the Fibonacci retracement tool from December 2013 until the low, and we look at what happened for the price of XRP, it did a full extension on that first major breakout. I mean, right here, it went to 1, it went to like 0.007, came back down to 0.002, then blasted off. So I would expect something like that to happen for XRP if we were to measure from the all-time high right here down to COVID low. I would expect the breakout for Ripple to be somewhere within the fib ranges of 1 to 4.236 first. And so it wouldn't be anything super dramatic on the breakout. It might be $1.30, maybe $2, maybe up to $3. We see a consolidation, maybe a sell-off back down to $1. And then we see the next major move happen at the end of the bull run, the tail end. XRP has always been a laggard in the market, and it usually moves last. That's what happened back in January of 2018. You saw like the last week or the last month it pumped up. So I wouldn't be surprised if that happens again. Don't be shocked, guys. That's what they want. They want retail to sell their bags. Why do they want retail to sell their bags? Because you are not their target market. Banks are. That's why they have over 1,700 NDAs with banks, financial institutions, massive whales at billions of dollars, hundreds of millions and billions of dollars. And so they want to shake you out. They can wait as long as they want, because when someone has $10 billion, do you think that they need their portfolio to go up tomorrow to pay rent? Of course not. They can sit for another decade. They don't care. They have enough money to live for the rest of their life, and their whole family's taken care of. It's just a game to them at this point. So they're playing games with you. Don't let them shake you out. And on a global stage, there's an even bigger game being played that we're going to talk about in future videos with the petrodollar deal ending. I think it was yesterday. No, it ended 3 days ago. The 50-year deal between the USA and Saudi Arabia to sell oil in dollars is over. This is one of the biggest deals in history that you need to be paying attention to. This would lead to lower demand for the US dollar. Do you think that this is going to get renewed and they're going to somehow form a new deal? Well, what I think is happening is the facts of what just took place. Russia's Moscow Stock Exchange officially halts trading in US dollars and euros. And look at this video right here and read the body language right here with Vladimir Putin. It's basically the deal's been done. It's over. The BRICS nations, they're raising in terms of their GDP, and it's been drastically growing over the past few years. And so what they're going to be using for global trade won't be the US dollar long term. And if you listen to what Jim Rickards had to say about the death of money in the petrodollar back in 2014, we're seeing it happen right now. This guy was way ahead of his time.
One of the big props under the US dollar has been what's called the petrodollar deal. This is something that came out in the mid-1970s, again, a time when the dollar was under attack. And the United States, through Henry Kissinger, said to the Saudi Arabians, look, we will guarantee your security, the continuation of the rule of the House of Saud and the national security of Saudi Arabia, because they were weak militarily, and they had I like to say the Middle East is a bad neighborhood. They had a lot of enemies. In exchange, we want you to price oil in dollars. There's no reason why oil has to be priced in dollars. It could be priced in today, euros, back then, Deutschmarks, Swiss francs, Japanese yen, gold. You can price oil a lot of different ways. But they agreed to price it in dollars in exchange for our guarantee of their continued rule and their national security. That deal worked beautifully for 30 years, through the 80s, the 90s, the early 2000s. It really did put a floor under the dollar. But just last December 2013, President Obama reneged on the deal. He engaged in the beginning of détente with Iran, which is a bitter enemy of Saudi Arabia. So the U.S. is now saying to Iran, hey, you're our cop on the beat. You're our best friend in the Middle East. Well, this is a stab in the back to the Saudis. By the way, Saudi sells most of the oil these days to China, not the United States. So how long will it be before Saudi Arabia says, okay, China, we'll take your currency in exchange for oil, or maybe we'll take gold, or China buys gold and gives us gold, and we'll send you the oil. But one way or another, the dollar is out of the picture. Again, that hasn't happened yet, but that process is already underway. So this is one of many threats to the reserve currency status of the dollar. And when that status goes away, as I described, you could be back to a world of borderline hyperinflation in the U.S.
And so with that, what we're doing to prepare ourselves is we're backing up our trucks all the way to the bank, beep, 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 boom, backing it into the banks, grabbing the bags, packing them, stacking them, leaving no bags left behind, because we believe that the spending power of the dollar is going to keep going down in value. That's a fact based on permanent inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in value. That's the truth. And together, we're all going camping on the beaches of the moon. So if you're ready to become the first millionaire in your family tree with crypto, and you want to get early access to our underground guidebook to become a crypto millionaire when it's released, then all you need to do right now is go to bullrunners.com, and you're going to get exclusive early access to alerts on explosive altcoins with timely notifications about high potential projects before they hit the mainstream market. You're also going to get access to daily market analysis videos where you can watch daily videos like this to stay up to date on the latest trends and updates in the cryptocurrency market. And you're also going to receive pro trading strategies and tools for you to access proven trading tips and institutional grade indicators to refine your trading strategy. So don't miss out on the launch of our new underground guidebook called Altcoin Secrets that's going to help you discover the next 100x altcoin. All you need to do to get early access is go to bullrunners.com, click the button on the page, put in your best email address, and you'll be instantly subscribed for the early bird list when it's released. We know you're going to love it.